What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. Thanks to all those who continue to tune in. It really helps the channel grow. We thank you very much. And welcome to those who are new to the channel. We hope you found a new home for at least SOXL or information about SOXL, and we encourage you to go back and look at our previous videos and see how we stack up in our analysis. Now, the nightly and weekend videos like tonight's video, we focus mostly on identifying triggers and targets for trades ranging from short-term intraday scalps or day trades to long-term swings, or what people call leaps as well. So if you want a deeper dive into exactly how we set the charts up with our broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the STRAT, which is the base of our charting and trading method, that there's a link to a free quick reference PDF guide in the description of this video. It will give you everything you need to know to understand the basics of the STRAT, which is probably the easiest or simplest way to get some in-depth information about price action on, again, any ticker symbol. This can be used for any ticker symbol on any time frame. So very, very key piece of our trading and charting method. But if you are not familiar and you don't want to look into the STRAT for whatever reason, then hang with us through the whole video. You don't need to understand the STRAT to understand how we read the price action and why we are providing the information that we provide in terms of how to line up your next play. So again, if you're not familiar with this channel, we hope you have found a new home, and I encourage you to watch the full video. I think you'll be happy with the full analysis. Let's go ahead and get into the agenda for today. We'll go ahead and recap price action from today, Wednesday, May 13th. Then we'll zoom out like we always do, take a look at the week, month, quarter, and year price action before we zoom back in and look at the what we call our 4-hour markers and the triggers and targets for Thursday, May 14th. We'll also do a quick look at the week, month, quarter, and year price. Triggers and targets as well. So let's go ahead and get to the charts. Starting with, if I can get to the chart, if we can, we'll go ahead and start with the 5-minute like we always do. This is how we take advantage of the proven and repeatable strategy to enter into either early morning scalps or early entries into longer day trades. All right. So what we first need to have on the chart is the previous high a day, previous low a day, overnight high, and overnight low. Once we have those, we have to basically wait for price action to start for the day. We call that the opening print. That's this level here. And what we do is we look for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. Or we look for higher lows at or above opening print, targeting overnight high and previous high a day. Now, today was a little bit tricky. One thing that you always want to keep in mind when looking at these plays is where is the full time frame continuity, right? And we had full time frame continuities to the upside coming into yesterday. And yesterday was the first time that we flipped the day and the week red, right? So what that means is there's going to be a fight over price action, right? There's usually a little bit more up and down price action, maybe a little bit more sideways, overall price action than you would have when you're trending, right? And when you're trending, it's usually because you have full time frame continuity, right? So when we were trending up, strong, just going up every day, we had that full time frame continuity. And now, opening today, we had that, conflicting time frame. So we wanted to be patient this morning and let things kind of play out. Internals did not open in the gutter like they did yesterday. So again, more of a neutral sign. So no real reason with the uptrend that we're in the possible higher low on the 4-hour and day time frames that we put in yesterday. There's no real reason to jump into puts, before we really need to, right? So if you are playing the proven and repeatable strategy, obviously we had our opening print here. We pushed down, we closed the gap, right? We opened above previous high day. So even if we go to the upside, previous high day is going to be out of the picture as far as the target. Only overnight high would be left. But we initially opened and we closed the gap, and we actually went a little bit further than closing the gap, right? We pushed down and we did actually make a lower high. Now again, looking at QQQ internals at this point in time, they were neutral, slightly bearish leaning, but they opened that way, and we're pushing up. So no reason for us to get into puts, even though that is, what the proven and repeatable strategy would call for, right? We've got to use a little bit of nuance with that, right? Excuse me. So if you did take this lower high, you would have to wait until it was actually triggered, right? So this 2 up doesn't become a lower high until we give it a 2 down, or go below the low of this candle. We didn't do that till all the way down here. So that's a lot of room as well to have to wait for a pullback, right? If you go lower low and your stop is set at the previous lower high, right? That's a lot of room to give, a lot of money to give to the market before you actually stop out, and so you'd end up pretty red. So you want to kind of have your wits about you when you're doing that. You may want to even go down to the 1 minute time frame. And again, we've preached over and over that if you're going to go to the downside, don't get too far ahead of your skis. Don't jump in heavy like you would with calls right now, right? You want to just kind of test the market, especially early in the morning, if we don't have everything going your way, right? So you don't have full time frame continuity to the downside. You don't have market internals in the gutter. So, if you do enter, just know that even though you're under the opening print, there is that added risk that you could give this back due to the range that there was on this candle, right? It was from 179 to 172, right? $7. I wouldn't be willing to risk that for downside action in this uptrend that we've been in, and knowing that we probably put in a higher low on the 4 hour and the 1 day, right? So what we do is we continue to be patient, and we look on the 15-minute time frame, right? So we can see here we ended up putting in a higher low on the 15-minute, right? We opened, we pushed down, but then we made a higher low on the 15. So while we're below opening print, we have to remember the uptrend that we're in, and this is going to be added risk if you're going to take this, right? This is going to be outside of the proven and repeatable strategy, because we're not taking a higher low at or above opening print to get in this call. At this point, we're just looking at strictly at location on the chart, right? We pulled down, had our deep pullback yesterday, V-shaped recovery, gapped up this morning, pulled back, bounced off of where we ended yesterday's price action. So, I mean, all of that seems a lot more bearish or bullish leaning than bearish to us. So we went ahead, and with the added risk, knowing that we're under the opening print, we went ahead and got into calls once this 2 up locked this 2 down in as a higher low on the 15-minute time frame. All right, from there we came up, got a lower high, but again, you got to look at the where we're at. Okay, we just popped back up to the week being green, right? This 180.96, right? We popped back over that, and now we're playing with the opening print, right? So it's reasonable to think that we could get a little bit of rejection here, a little bit of a pullback to let bulls reload, and then take off again. If you take this, these 4 or 5 candles here, and then these 4 or 5 here, that also looks like a bull flag, right? So we were able to stay in here, made the higher low, pushed up, higher high, higher low, higher high. We went ahead and exited about 50% of the position once we hit overnight high. Right, that's the ultimate target for the proven and repeatable strategy, and at that point we're trying to just kind of lock in some profits. We're getting towards the middle of the day, and we have to keep in mind that on the 4 hour, we talked about this yesterday. We closed with an inside candle, so we had to watch how that first 4 hour of today would close, because it could be setting up a 1-2 up, 2 down reversal back to the downside. So we wanted to make sure we locked in some profits there, stayed in with some runners the rest of the way. Got this lower high. As soon as this went 2 down on this lower high, we went ahead and sold the rest of the position that we bought down here. Made some very good profit for today. The week was able to close back in full time frame continuity, right? Or the week and the day, I should say. So we're back above the week flip. We're back above today's flip. So the day, the week, the month, the quarter, and the year were all green by the end of the day. So again, momentum in the bulls' favor, right? And if we just pull back a little bit and look at that 4 hour, like I was talking about, right? Here's the 4 hour. Here was yesterday's downdraft. We went 2 up on that candles. So that's a lower high, or I'm sorry, a higher low at this point, right? We stayed higher than this low, higher low that we had before. So we went higher low, higher high, higher low. We're still looking for that higher high, but for at least for right now, the uptrend is still intact. At worst, bullish consolidation where we might move sideways, right? So not much else to say there. Same with the day, right? We set that higher low yesterday. Haven't gone higher high yet, but higher low, higher high, higher low, looking for that higher high. Again, just continuing this uptrend. Excuse me. On the week, we've got back green on the week, like we said, and got kind of a hammerish candle right now. Still a little bit of a wick on top, so we'd like to, see that be eaten up a little bit more, get a little bit more body on this candle by the end of the week, finish with a nice strong hammer. That would continue to give bullish momentum to the upside, right? Don't really need to go through things on the month, right? We're just mashing out after a higher low. Same thing with the quarter. Keep pushing to the all-time highs. And on the year, yes, we did have this 2 down last year and then went 2 up this year for the 2 down, 2 up, but magnitude was the high of 2024, and we're way past that. So not a whole lot else to say there. I'm going to kind of try and keep these videos a little bit shorter now until we get a better look at a pullback, right? A lower high on the 4 hour, maybe even the 1 day. That's when things are going to start to get juicy again. But for right now, it's just, status quo following along with the trend, right? Let's bring out the 5 minute, right? So in preparation for tomorrow, did I not move my 4 hour markers again? Oh man, I did not. So let's go to the 4 hour, activate this high, move that to previous high a day, and take the previous low a day, move that up to today's low. All right, there we go. So let's get back to the 5 minute, and let's take a look at how we'll attack things tomorrow, especially early morning for either early morning scalps or early entries into longer day trades. Again, for that, we need to have our guardrails, essentially previous high a day, overnight low, previous low a day. 185.47 right now in after hours. So let's just say we push up a little bit more, get closer to previous high a day, and we've got a little bit wider overnight range than we have currently. So we've got previous high day, overnight low, previous low a day. Honorable mention is the week flip. Again, if we flip the week back red, obviously that puts things into time frames into conflict, and we should expect more choppy action at that point. And again, not bearish action, but at least choppy action. So those are our guardrails. Now let's say we open somewhere in between the overnight high, overnight low, right? It kind of sets us up with the ideal 2 targets on each side of the equation, right? So if we open here, maybe we pull back, at open, but bounce off an overnight low and come back up, ultimately get a lower high at or below opening print. We want to look to get into puts, targeting overnight low, previous low a day. Again, keep in mind that honorable mention, the week flip, even if we poke below it, we could come back above, keeping it as support. So again, don't get too far over your skis on those puts. Make sure that QQQ internals are agreeing, and you have the conflict of time frames. Those are going to be key if you're going to expect anything to the downside. If we open and we push up, maybe get a rejection off an overnight high and pull back, but ultimately get a higher low at or above opening print, we want to look to get into calls, targeting the overnight high and previous high day, right? That's the proven and repeatable strategy. Those are the targets. And of course, if we get some momentum going and we go past those targets, then we can look at the triggers and targets we have on the higher time frames in our notes here in a second. But again, for all intents and purposes, that's the proven and repeatable strategy. Higher lows at or above opening print, look for calls, looking for overnight high and previous high day. Lower highs at or below opening print, want to look for puts, targeting overnight low and previous low a day, right? Let's go ahead and switch to the 4 hour, give us a better look at a full day trade, possibly overnight swing trade. Again, we're in blue sky territory, so we're using strictly broadening formations and Fibonacci extensions to help with our targets, as well as if we do get pullbacks, that gives us a little bit of measuring stick as far as, looking to previous price action to know where we may get support resistance as well. So that's why we've got quite a few fib extensions out here, but they have been working out so far, especially intraday. So we'll keep those out there. But again, we did get that 1-2 up on the day. Remember we said watch how it finishes. We didn't want some type of inverted hammer. At the same time, we did finish with an slightly inverted hammer, but a red candle in the second 4 hour of Wednesday's price action. So that does still make me a little bit cautious because we didn't go make a higher high. Like QQQ, it made the higher high. So it's still in that uptrend. Right now, we're still in bullish consolidation with higher high, higher low, yet to make the next higher high. So I just do need to still be wary that we don't have a one combo 2 up, 2 down that might trigger tomorrow. Right, so just want to keep that in mind. I don't know that it's going to happen. We'd have to see some things change overnight, but we have a lot of economic data being released tomorrow before market opens and slightly after the market opens. So that could be the catalyst that puts us down. So we have this combo 2 up, 2 down. That's a possibility. Otherwise, we're just continuing to the upside and looking for a new all-time high. Right, giving us a higher high, keeping that trend going on the 4 hour. On the day, same type of thing, right? We made the higher low, but we haven't. There we go. And let's get a better chart here. We made the higher low, but we've yet to make the higher high. So we want to see that 2 up continuation, or basically the 2 down combo 2 up, which has a magnitude of Monday's high, right? And then if we continue past there, then obviously we've got market makers expected move high out here at 204.83, lining up almost perfectly with this quarterly broadening formation and these daily broadening formations. So I would look at 204 as a place where we either reject or go sideways should we make a new high tomorrow. And then to the downside, if we go 2 down on the day, there's a lot more magnitude on this 2 up, 2 down reversal. That would have us testing last week's 50% level again. So, if that is the case, again, don't get too far over your skis and don't go too heavy to the downside. You really want to have those QQQ internals dumping if we're going to, expect any real movement to the downside. Otherwise, we could go 2 down and just, make another higher low, and we've got bullish consolidation at this point, right? So, nothing really changing, tomorrow, same type of looks, right? So we'll just get to the notes at this point and kind of end the video. So for Thursday, May 14th, 2026, there'll be 160, and actually I didn't change that either. There's 159 trading days left in 2026 on Thursday. The close price on Wednesday was 184.24, which means we flipped the week back green. So in order for it to go red, we know we've got to go back below that 181 level. Month, quarter, and year are all green. Got to go a lot further to flip those red. So not really looking at that happening tomorrow. And we know that the market maker's expected move is plus or minus $27.89 from the close price on Friday. Again, if you're not familiar with the market maker's expected move, check out one of our weekend videos where we dive deeper into that for you. That gives us a expected range of 204.83 to 149.05. And again, we're getting a little bit closer to the top, but 184, we still got plenty of room to go. We don't have any gaps above, but plenty of gaps below. So we always like to keep those in our notes, keep our mind on those. They can act as magnets on price action should we start getting those lower highs on the 4 hour and 1 day, right? From a scalping perspective, we talked about we're looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day, or we're looking for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. We talked about on the 4 hour, there is the possibility of going 2 up, 2 down. That would trigger at 182.67 with a magnitude of 172.26. So $10 magnitude in the face of an uptrend. Figured we'd probably give you an intermediate target there to be safe. Now, if we continue to the upside, going 2 up, going above today's high, we've got a couple extended targets out here for you. And the same type of thing on the day, right? If we go 2 up, 2 down, that triggers at 172.26, which is the magnitude of the 4 hour reversal. And then because that would take you all the way back down to 150.58 in the face of this uptrend that we're in, it's only right that we give you a couple of intermediate target points where price can either bounce or go sideways. On the upside, again, 2 up on the day triggers at 188.49. and we've got some extended targets out here for you, including the market maker's expected move high of 204.83. We know that on the week, we've already triggered the 2 up, 2 up, and actually we're back above that 177, so we can put this back in bold to indicate we are in force. We've reached a couple of our targets so far, but we've got some extended targets out here, including, again, that market maker's expected move for the week. The month, same deal, 2 up on the month. As long as we're above 130.12, we're in force. Just looking for those extended targets out here. Same with the quarter. And the year, we did the 2 down, 2 up reversal, but magnitude was 70.08, so we're obviously way past that. So again, just extended targets out here for you, right? So that'll do it for us in this video. We hope everybody enjoyed the video, got some good information. We try to jam in as much information as possible without taking up too much of your time, so we do hope you enjoyed it. If you did make it this far and you enjoyed the video, a thumbs up goes a long way. Right, it really helps the channel grow. We're a small channel still, but we're a free channel, right? We're just providing as much information as we can with, no membership fees or anything like that. We're not asking for any type of money like that. So if you can help the channel grow, and that will help us to be a bit better help to other retail traders out there, trying to get some of that money that the big boys are out there making, trying to establish some consistency out there in the market and establish a method or a methodology that can be repeated over and over. That's what we're here for. We're just trying to do that. So if we can put out a 20-30 minute video every day with some of that information, we would hope that a thumbs up would be easy enough for those to give who found something valuable from the information that we were able to provide. But anyways, I'll get off my soapbox once again, and we'll close out the video like we normally do. If you're watching this on Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.